following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, we're coming back here to the Diagnostic Trading Hour. I hope y'all are having a great day. Pulling up a few different things for you. Looks like need to open my Thinkorswim here. I don't know why it's been going a little bit slow lately for some odd reason. Anyways, let's just shut it down and relog back in. That's an easy process. And I'll open it back up for you. We'll get to your daily market update. Make sure, of course, you are tuning in at TFNN.mobi to listen to us on your mobile phone, no matter where you are. Live inside the eSignal platform, you can check us out. And, of course, on Tiger TV there at TFNN.com. And like I said, here in just a moment, I will have your lunchtime market wrap up and posted for you. And a couple other things I was going to go over with you today. So give me 1 second. I just want to get that caught up. It's just taking its sweet little time. All right. Well, I can pull up a couple other things in the process while we're waiting. And all right. Have a user asking me, what is the expected range of movement? And yeah, that's from the wonderful Thinkorswim platform when it renewed itself. Whenever it popped back up. Let's see here. It was loud in your ear, was louder in mine. Okay, let's say we're looking at euro dollar. And I'll just pull up, we'll say a 5-minute chart. Okay, pretty basic chart here. We'll go in and pull up that one. When that goes up, I get my chart to ever show. Oh, that's so frustrating whenever those errors pop up. Let's see here. And we just pull deviations off. All right, 1 second. I know it's just taking a moment, so you just have to bear with me. All right. Okay, so now let's go ahead and let's get on in here. And let me open up the expected ranges for you. Get back on track, get in our, let's see here. Not helping. Okay, so if you put up expected range, and I put 60 minutes, say, on there, and open that up. Let me stop and reply to the moderator. All right. All right, now that we got that done and opened up, we got expected ranges. So this is basically how far do we expect the market to move at any given time, okay? So for this 1 hour period of time, what is the expected move? And I actually break this down. I can pull it on 5 minutes, 7 minutes, 100 minutes, 120 minutes, 60 minutes, a day, whatever, any amount of time frame. And then I can go in here, and what this will do for me is it'll automatically measure from the open, okay, how far do we expect it to either move up, or how far do we expect it to move down. Pretty simple. Okay, it's a pretty simple concept. And why is that expectation important? How does it help to have an expectation of movement? And is there more to it? Okay. Well, there's one more thing to it, and it's just like what I do on deviations. Okay. Here in this lower indicator, I actually plot. Got the wrong thing there. Let me see here. Okay. I plot what the expected range is in, say, ticks. Okay. So if I'm looking at euro dollar, basically I'm expecting a 40 pip move in this hour. All right. So that's the expected movement. So if I were to measure that movement from the close of the hour to the higher close to the low, that's what the box is. So if it went up, it should go up 40 pips. If it went down, it should go down 40 pips. Okay. Now, I also measure from the high to the low. So if the market runs up and if the market starts pulling up, well, it's moved up X ticks from the low, right? So we moved up from the low, which means we're getting more and more overbought, meaning that's a sell possibility, okay? Or if it pulls down from the high, we're getting more and more oversold, so that becomes a buying opportunity. And so right down here, this red and green is actually measuring how far did it pull back from the low. So on the red there, the green is measuring how far did it pull back from the high. And it lets me know instantly, like, hey, is it approaching that expected range? Has it hit the expected range? So that's what the black line is. Is it approaching the expected range? Okay. And then has it hit the expected range? Right there. So we got a red one, a green one. We'll just sort of mark them up. And see if we can find one that'll give us an earlier alert here. Here, I'm knocking it out pretty good today. All right. I'll move that over where you can see just the line itself. There we go. Okay. So how does this help me? What can I do with this knowledge? Well, if I know that's the expected movement, and that means that I have a very high possibility of doing a reversal trade when that expected movement is hit, when it actually gets that far. Okay? So I could go up here and I could sell if it hit the expected range, or I could buy if it came down and hit the low of the expected range, or if it hit the high to low, like in this case right here, before it even hit, it didn't hit the low of the bar, right? It didn't hit the low from the open, but it did move 40 pips from the high to the low, and therefore did hit that expected movement and pulled back. Now, is that going to be a long-term strategy on the 60 minutes? No, but I mean, maybe you're looking at 15-minute bars over, 4 hours. Okay, that could be a different way to play it. There's a lot of different ways to play it. If you're trading binaries, then you could go in and you could buy. I call this boomerang. When it comes down, it hits the expected range or the expected range high to low. I can look at a potential buy or a potential sell. Pardon me. And I usually will do a deep in the money contract, and I'll set a stop basically right at the strike if it's hit. And it does very well over and over and over again on the different trades. Let's see if take your swim. Okay, finally got around to booting back up there too. Anyway, so it's about expectations, and I mean I talk a lot about that in diagnostic trading. That's the point of the show is Diagnostic Trading Hour, and it's about how to look at what other traders expect, what is the expected move in a market, and how to basically go, okay, how can I be one step ahead? So how can I look at how statistical traders look at the market? That's expectations. How can I look at how fundamental traders look at the market? Okay. and that is news. How can I look at technical indicators? That's your support, resistance, your Fibonacci, MACD, stochastics, and, you name it. All right. And how can I look at seasonal traders? That's times of day or quarterly cycles or annual cycles or presidential cycles, okay? And putting all that information together, the more of it you can understand, the more of it you can accumulate, the larger, depending upon the trading system you're using, the further ahead you can be in making your decisions. So instead of being, reactive, you can be proactive and place those orders in advance. So for instance, like I could go in here, I say, hey, it's at 75% of the expected range. And so I think it's probably going to go, right here goes in. It's probably going to go on back up. So I need to get ready to buy it deep in the money. Pop, it hits it. Okay? It hits it. I go in, I buy a deep in the money contract. And then it expires in the money. So that's just, that's like a current hour trade. And we can go through and look at these. I mean, these are nighttime, daytime. And there are going to be a couple that are going to get you, but it's about probabilities. So if I go over here and I'm like, okay, well, this was a sell. It was obviously profitable. Okay, that was a sell. That one would have lost. In, out, move on, next trade, okay? You go over here. We had a buy. Okay. We go on over here. This one pulled down. We have a buy, pulled back up, a full expected range. We have a sell, and pulled back down, and you're still in that trade, so you probably got in, took profit on that one, and took a small loss on that one. Okay? We go over here. We got a sell in the money. That one's profitable. We go over here. We got another sell. Hit the range there, profitable. We got another one over here. Got a buy. Obviously, that one's profitable, even on a big range. Okay, market's waking up. Notice how the range, and notice this, the range got bigger. They're not all the same size. So the range increased for the market volatility. We go over here, and I'm not even talking about volume yet. I'm just keeping it really simple. We'll go into volume here in a second. You got a buy right there. You go over here, you got to sell. I mean, it doesn't get a lot easier than what we're going over right now. So we're going to be able to do these trades. So, anyway, stay right there. We'll be back right after this break.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Darrell Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. And again, so this time about expected ranges and high probability trade setups. Now, if you want to be more conservative, if you're doing in-the-money contracts, you could go in and just wait until it hits that expected range and then do a deep in the money. If you want to be able to grab a few more, you can go in and you can play off the expected range high to low. So just be aware of that. You know, you want to watch volume and look at things when you have a tight stop. Some people will wait until they see a pullback, or, you know, they'll go down to a smaller bar. So, I mean, literally a trader may go in here and they may go down to a 1-minute bar. Okay? And so they can see a little faster price action, because they're really, you care most on this about the range. It's not really so much about the bar setup, even though there's a lot of different bar setups you could apply to it. But you could go in and, by, you know, making, like, say, at 1-minute bars, be a lot more fine-tuned, detailed, I guess you could say. So let's back out. Let's look at that same chart that we just had. And let's look at our setups from today on the chart, okay? So you could go in here and basically you're waiting for maybe it to, you know, hit the range and then have a down close, okay? Well, that could be a sell right there. Or right here, hits the range, has a down close, you can have a pretty tight stop. Well, in that case, it took off, okay? Pretty high volume day today. Or you could be waiting for it to hit the, you know, 75% marker. And when it does, then you look for a short. So, I mean, it comes right up there. You got to sell, comes right back up there. You got to sell. Comes down here. You got to buy. And, I mean, you're talking, you know, really tight stops. I mean, 1-minute bars, 5-10 ticks. And literally just trading those, but trading them usually to the end of the hour. So some people go, well, I mean, do you just hold on to it? No, I mean, I usually will trade it to the end of the hour, even if I'm doing futures or forks. I I have a few traders, at least that I know of, that use these, and this is how they trade futures and forex. They literally put up the ranges, put up very simple charts, and just trade as soon as it hits an expected range with a tight stop. And so many of them do turn around, and it turns out to be, really good trades. So like it comes down here, boom, they get an up closer, and all right, I'm in the trade, and then they go over, it goes up, and they get that nice short, and they go and they make 60 pips. So, but it's basically rinse and repeat. And, a lot of times they'll be scalping. Obviously, they're not going to go. They expect the range to be the expected range. So, if they get even anywhere near that expected range, they're going to start tightening up their stop. So, and you can just go forward over and over again and see, and it's these bounces right off of these ranges. How many times could you go in and just scalp 10, 20 ticks just playing that? Okay? Or you could be doing, in the money binary scalps, or, I can just keep going. We can go and go and go, right? So really, really simple way of looking at, how to trade, and built on expectations. And, it's not that it won't exceed expectations at times, but when it does, just get out. Because most of the time, an expectation range is built on a 68% probability curve. So 68% of the time, it's not going to exceed. Well, that's pretty good odds. Okay, especially if you can have a good risk reward and tight stop. If you can make 30 pips and lose 10, and do that 68% of the time, then, you're a very happy trader. So, anyway, just want to give you a different idea, a different way to look at trading that you may not have done. A lot of traders don't use expectations in the sense of an objective measurement of how far price should move. They more look at, a line, some sort of technical analysis, support, resistance line based on price action, based on technical analysis, based on indicators such as moving averages or stochastics or whatever. And there's nothing wrong with that. But if you can have that and you start throwing on just a few basic things, then you might actually be able to come up with something that's even better for you versus that lagging indicator. You could be a step ahead on the expectation of movement and maybe use the indicator to help you out on defining that entry or that exit. If I was going in to throw on just a classic, RSI. Pardon me. We'll see how that looks when we get back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And so what I was doing was I was just looking at a few different, ways to potentially, put expected ranges into action. There's a lot of different ways that you can do it. And so, one thing on here, I threw out an RSI, just the standard RSI settings that I use. And I went in and I have expected range up. And so what I'm basically looking for is, a period where we hit 75% of expected range, and that, RSI is hitting like it's 80 or, 20 point over here. And so both of those, when they both happen, then, again, both of them, I want them to happen. Then I'm looking for a, sell setup on that. I could wait until the line hits, but a lot of times you'll miss a lot of good trades. And I mean, have a nice tight stop, 10 ticks or so. And you can scalp it. You can trend trade it. One of my thoughts is go in and don't get out until I get a, basically a trade in the other direction of at least 80%. So if I go down and I get, a short over here, the market's dropping down, dropping down, dropping down, dropping down. Okay, boom, right there, I'm looking to get myself, potentially in a trade because we're, hitting that little threshold, that little line right there. Okay, so I get my little alert level. And I see that level right there, and I'm like, I need to tighten my stop and get ready, to go ahead and go long. Probably maybe a tick above the high at this point. And so I'm waiting, and finally I get triggered right over here. Okay, we just broke above, and as it's popping back up, I go long, It never breaks. Okay, it never breaks over here back above the 80. Comes on back down. Now, on this trade, may have been stopped out of the trade. It depends. Let's see, 94. What's the low of this bar? Let's see. A got just trying to figure out what the low is. We got a low of 82. Going over here, 194. So maybe it stopped out by a couple ticks on the trade. Depends on if you're doing an always long short. But anyway, so go over here. And I guess I could say, honestly, just a couple things I'd put into play is if my stop's a couple ticks away from the range, I'm going to put it under the range. So just look at the ranges, right? But anyways, so let's just say you were stopped out or you said, hey, you know what? I don't want to have my stop right inside the bottom of the expected range. I'd rather put a little bit above. One of the two. Either way, I'm getting out. I'm going long. I go long. Boom. RSI pops back up. We hit our expected range as well. So both conditions are met. Now I got a short. Simple. So it's going on back down. Going on back down. Now I could go in and play this oscillation again if I wanted to. I usually don't play more than 2 oscillations in a single hour. So, but anyways, so, or a single period that I'm trading. If I go over here, so that you're short on that one. RSI's dropped on down, RSI's dropped on down, RSI's dropped on down. New hour, either you're out of the trade or, you went long because you got a long signal, RSI dropped below, and we went back up and hit that 75% marker. Moved on back up. RSI has hit its 80 marker. We've hit our 80% marker. Okay, now it's time to tighten our stop, so you're probably out of the trade. We go over here, we go short. Moving on down, we're not really getting any kind of commitment on the downside. So either you're riding that trade out or, you're stopped out. Because RSI can always stay overbought for a long time. Anyway, so comes on back down, but we haven't hit expected rate, so we don't do a buy on this one, okay? We're going back up, and we hit expected range, and we, RSI's exceeded, boom. Okay, so really simple. Goes on down, pops on back up. Expected range hasn't even come anywhere close to being hit yet, so we're still short. We follow the trade down. Finally hit 75%. We start tightening our stop. We tighten our stop. We tighten our stop. We're waiting to break a swing high, swing low here. And finally, we get an RSI as well. So we had an RSI there. But finally we get an RSI and pulls down. We're at the bottom of the expected range. I expect a reversal here, especially at the bottom of the expected range. We get it. We have a lot of volume, a hard volume sell-off, which often leads to reversal as well. You get a high volume spike bar like that right before the expected range, I'm going to look for a reversal on it. If I'm wrong, I'll be wrong quick. If I'm right, then, hoorah, whatever, right? So yeah, so boom, pops, goes back up, oscillates around. Might have get hit a little bit on that one. I mean, we've had some pretty big wins here, by the way. I haven't really been counting ticks for you. But, it's going in and, that's 60 ticks in an hour, okay? Not just euro dollar. So going in here, and this trade actually could have started earlier. I had it labeled on a larger bar. So we could have got it, back here on the trade. And starting this trade to go long. Oh, pardon me. I'm just sneezing like crazy today. Can't get to that sneeze button fast enough. Okay, so it's popping on up. And let me get back on that trade for you. So we're going up, 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 up. And we're waiting to hit the expected. Like, we're not see that red is not hitting that 80% expected level. Finally, it hits that expected level. We're going to go ahead and tighten up our stop. We also have RSI above it. And so we're tightened up to that swing low right there. And next peak, boom, we hit the next peak right at the expected range. We can take that trade. Pops on back down. And really, this one, I didn't even label it. That's a buy. Not only do we have the RSI, but we also have the expected range right there exceeding. Okay? So exceeding that marker and getting up to right where we expected it to get up to. Pops on back up. And again, I only do 2 trades in like an hour on this. I mean, this is binaries. This is spreads. You know, this is, I mean, we're doing 1 hour trade, 2 hours at most. So you could use like next hour expiration. This is FX. This is futures. So this is not, you know, tied just to one specific thing. Anyway, so we're going in and trying to find, so we got a retracement from the high to go short. We then, let's see, go over here, we get a retracement to go. So I just want to track this correctly for us. Put that right there so it lines up where it should be. Or delete that one. There we go. Let's redo it. Remember, I drew these on the 5-minute bars earlier, but I just want to give you more granularity if you're wanting to really just trade the swings. So it's going short, goes on down. We do hit our expected range. We don't hit our RSI. We leave the trade alone. Comes on back up. And we got another short. Still haven't hit our RSI. Comes on back down. Now we've hit our RSI, barely hit our RSI, okay? And we've hit our expected range. Hop in there, grab that one, okay? Moves on up. I'd say on that one, you're probably going to be out of the trade. Pretty, like it came in, came down, and, you know, maybe 10-tick loss on that one, but that's after capturing a pretty decent little, you know, 20-tick profit or whatever. So it's still a profitable hour. And then we get into, you know, the nice, boring, flat lunchtime, right? With nothing supposed to be happening. Anyways, and I mean, if you, yeah, let's see here. All right, so we're waiting. RSI is up. Expected range is up. I mean, I'm going to be shorting it. Okay. Now, obviously, look to the right side of the chart. That one didn't turn out so well, but you don't know that when you see it's doing this, and you're like, okay, it's up on the expected range. Okay, that looks like a good. I mean, right there. If you say you're not going to sell that, you're a liar. Okay, so anyway, start ticket, boom. Okay, boom, I'm out of the trade. Simple. If I'm in the money binary, I'm out of the trade. So this one takes off on us, and we're doing. I mean, we're fading. We're trading, you know, contrarian trading here. So we are going to miss some. We go on down. So let's see, where does the next trade come on into place? We're going down, down, down. Expected range is hit. Okay, back here. RSI is not yet exceeded. Waiting. RSI is finally exceeding. Okay, now we got to buy. So, and we're in extremely tight ranges, which, by the way, are a lot tougher, you know, to trade. Where, you know, I mean, you can see when these ranges get narrower, when they get wider, okay, and sort of how it plays out. I mean, look at these little bitty ranges, you know, at night. So let's see, let's bring it up, make it look bigger than it is. There we go. And I mean, so I want to show you that, you know, some of you nighttime traders out there, I mean, we can go in, you can see these just bouncing on the ranges all the time. But, and it's key. I'm using the range. I'm using the high to low of the range, and I'm using the RSI. I'm not just using any one of them independently, okay? And I could use a chop filter. I don't want to add in one more layer on this to make it more complex. But, I mean, it's a really, really, really simple method. Okay, and I mean, there's a lot of different ways to trade. I had a guy last night, you know, he's like, so what, you have all these systems that you teach. What's the best system? And I'm like saying there is no best system. Okay, what's the best system for you? You have to decide for yourself. But in reality, there should not be one answer to that question. That's like saying, what's the best club to play golf with? Really? I mean, unless you're Happy Gilmore, you need a few. Okay. So, but even he had to decide to, you know, pick up a couple different ones. But you need a few clubs in your bag, okay? Depends on conditions and what's going on and everything else. Anyways, going over here. Let's see. I mean, we could just rinse and repeat this thing again and again. But we go down. We go. Okay, we're going down. RSI hits, and I'll focus on Here, let's zoom in on the hour. Hope if I do enough of these, some of y'all will pick this up. Okay, so where was I? I think I jumped forward on myself. That's so flat. Anyways, we'll do it. All right, so right here, let's see, RSI is not up yet. No trade. Go down. No. I mean, there's just like nothing. Let's at least get to. Yeah, let's get a little more. Let's get to like the 8 o'clock time frame. The markets wake up a little bit. Okay, we're not hitting expected range, so I'm not doing anything for that specific trade right there. Pointing to this current hour. So we did not hit expected range. But RSI had a trade. Yeah, but RSI also had a trade there, and there. You will get slammed to death just using RSI, okay? So it's a good confirmation. It is not something you want to use by itself. Let's see here. It'll get way too many false signals. So right there would have been nice, but again, we did not hit it. I got to hit at least that 75% marker, okay? Going on over and hit my 75% marker right here. I go short right there. Okay, 75% of expected range, especially at night when you see that volume is really scarce. Notice I'm going to be a little pickier when volume looks more like this. Okay, and I'm looking, by the way, at futures FX volume. So when volume is, you know, I mean, it's not that you don't have a few spikes, but I mean, it's really low. So I'm really going to be looking for that 75% reversal on low volume. Okay, and I go short right over here. Looking at that, it's moving on down. Looking for a reversal. Sorry, I'm sneezing so much. Looking for a reversal. It's going down, 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 down. And then right here. Okay, now RSI's drop below. We've hit our 75%. We have a buy. We buy back. Right there. And nope, 13 pips. Not that massive, but I mean, you're trading at night. Don't exactly expect to, you know, clean up. Anyways, so we're in that trade. We buy. We're going down. At night, I'm probably going to end of hour close it. Okay? We'll wait for my next trade, but you can end of hour close. You can go into the next hour close. But like if it's not done by this hour, I want to be out. Anyways, looking over here, going for my next potential setup and potential reversal. So we go over here. We're long in this trade. Nothing is happening. Quiet as can be. So got a pretty tight stop over here because we're not making big money, right? So you don't exactly want to use a 10-tick stop when the ranges are like 10 ticks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this two-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the fact, if the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Let's go over, like I said, it's a way to combine expectations with an indicator. And that's really just what I'm doing right now. I'm taking like normal RSI, okay? And I'm taking expected ranges and expected high to low measurement movement to help me determine swing points of where I want to buy and sell on trades. I'm going to use a stop at least like right outside the range. Okay, so if I get a buy like right here, it goes against me, I'm going to get out of the trade. All right, pretty simple. If I get a sell, and let's say that sell happens right, sort of have to do some of these because where they popped up. But we go up there, we get that expected range. If I get a sell there, I'm going to put my stop right outside the expected range. Goes in. So this one was a little choppy period, got, a few little hits on it. Before that and after that, before that we're making a little bit. After that, we're cleaning up pretty nicely. And so as it moves forward, we're going in, and we have shorts and we have longs and all that. But so I get another short right there. And then finally, the market decides to drop. Pick up a nice big move on that trade. Got a couple good longs. Pops on up. Goes over. Hopefully you've tightened your stop. We got another long right there. You got another long really entry you can take. Pops on up. Got a short setup, drops down. We get a long. Get a short right there. As we just walk forward and we look through it all. Get another long. There's top there, so we would have stopped out on that one. And waiting for another trade. Okay, we get a short out on that one. Flies up, so we're glad we're out. We managed our risk. It's okay to be wrong. It's not okay to be stupid. Not have a stop. Let's see here. So, anyways, but not saying it's the best system in the world. There's no best, but it's simple, it's clear, so that you can follow the rules on. You don't have to be a genius to do it, and but you're combining an expectation, which is not lagging. Okay, like I have the expectations are calculated for any period of time, any time of the day, any day of the week, and are specific to that time of day, that day of the week, that day of the year. Okay? So they're very specific expectations. They're not just generalized averages. And they filter out, massive highs. They filter out, like insane news events. They filter out, the stupid lows. So where, the market's not moving at all. Trying to take quite a bit into account. So, anyway, something new, a little bit different session. I like to sort of, teach basic systems now and then. This really, get you back to the heart of thinking. This is where one of the other systems I come from is going, okay, if I look at this expectation and I look at, this oscillator or this trend indicator, or I combine a couple things together and I get a, confirmation of two different things happening, then that obviously is going to become, one of the best signals I can get, because it's not just what I think. It's not just following a lagging indicator, or one that may fire off too many signals. It's combining expectations and a filter with, an oscillator or a trend indicator. So, like I said, just a new idea for the day. Let's see. You got NFP and some other things coming up. So make sure you put that on your calendar. Y'all have a great day.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.